I'm Corbett Wall with DV Auction, here with your cattle market summary for the week ending August the 18th, where the pressure is on now. I tell you what, we come through the previous week, which the market broke hard the middle of the previous week when cattle started selling at $1.15 and your cash feeder markets were sharply lower. And then we thought didn't recover, but we thought we'd shored things up a little bit at the end of that previous week. And then we come in this week, and then once we got in 2 or 3 days this week, sure by Wednesday, then we knew that we were in a full bore down market. And I wouldn't call it a wreck yet, but we're sure enough in a down market, and that's the only thing we can really concentrate on, is either trying to get as much value out of the cattle that we already have before things get any worse, or just trying to slow it down a little bit. There's nothing on the upside to really see right now. But you look at the board through the week, October live cattle contracts, Monday was down 80 cents. Tuesday was up 245, and we kind of had some hope there, but then it came very evident on Wednesday, down 72. Thursday was down $2.10. Friday was down 32 cents. To end the week with October live cattle futures at 105.90, which was just down $1.50 for the week, which is not terrible, but we had lost so much position for the previous week, and our cash markets are down a whole lot more sharply than that. But August live cattle futures, the spot market was down $3.35 for the week to end up at 106.37. And it's just keeping a $3 or $4 basis all the time. So you kind of know where your cash market's going to be. You just figure a $3 or $4 basis on what your spot live cattle futures contracts are. You look down the road and things are just about the same until you get out to April, which April is always a pretty good live cattle futures month. And it's pretty good. They're usually wanting cattle about that time to start getting ready for the build up of demand for starting into the full-on spring grilling season, and that's the high point really. If you look down the road on your live cattle contracts, is April, and it's setting about 111.30. But August feeder cattle contracts, Monday was up 52 cents. Tuesday was up 305. And people were thinking, well, maybe things are going to recover some of the previous week's losses. But then Wednesday down 310, and we knew where we were going. Thursday down $1.77. Friday up just 2 cents on some profit taken. And August contracts on feeder cattle ended the week at 140.50, down $1.27 for the week. And like I said, those are not sharp losses really for the week on the board, but it didn't lend any help to your falling cash feeder prices. So your fat cattle trade for the week was mostly on Thursday. You know, we come in here Monday and Tuesday, and guys were selling cattle at $1.10, and everybody's like, oh, come on, it's not going to be that bad. And selling them around 175. No, we can do a lot better for that. But really, Thursday morning when the board broke hard, we had no reason to get any more for that. And we've been holding $1.10 for a long, long time, and now we're setting at that really on the market. Your weighted average is under that, but who knows where the next spot is. There's some technical support at 105, but you know what I think about the technical support, where can you bet on that at? And I'm not sure what we're going to do in this down market we're in right now, but we've lost any market position that we had, and we're getting awful close to just keeping it in the triple digits here. But Thursday still had quite a bit of trade, 72,200 head on Thursday on a down market. And that's one reason for the down market, is everybody knows now and is convinced that this thing is really falling fast. And your feedlot managers, the guys that are selling these fats, they know the only thing that they can do is aggressively market the cattle, because our supplies, our market ready supplies, are as big now as they've been for a long, long time. We knew we were coming into those. We're in the middle of them. We're still current, but we've got to stay current. And even though it's $5 lower, you got to continue to stay aggressive, because you don't want these show lists to start getting big, because if they start increasing, and then our supplies far outweigh our demand, then we're really in trouble. But they did the right thing and sold them hard. It's just a shame that they couldn't dig in and hold the market a little more. If we quit having guys selling them pin after pin after pin of cattle on a Monday and Tuesday, sharply lower, then maybe we have a chance at keeping this market together just a little bit, even though we know we're in a downtrend. But for the week in the 5-area feeding region, we're at 92,700 head through Thursday. Not sure how much trade happened on Friday, but probably clipped that 100,000 head in the 5-area feeding region, which is pretty decent for this day and time. Your weighted average on live steers around 109.72 through Thursday. That's about $5.50 lower. Your dressed steers, weighted average on them through Thursday was 175.26. That was about $8.50 lower. So really tough on the cash market there. Box beef cutout values, we found a seasonal bottom here 2 or 3 weeks ago, but now the market's just lower, so it's going down some more. But we don't have any more seasonal weakness to lose. We found a bottom on that, but now the market's just lower on everything that has to do with cattle and beef. But choice cutouts, the weekly average of the trade this past week, 197.06, down 431 from the previous week's average. Select cutouts average are 194.81, down $1.75. Now look at remember when we had a $30 spread between choice and select cutouts? Now it's down to $2.25. That just goes to show you the difference in there. Your middle meats are not as important here of late, and the purchasing on those, which really drives your spread between choice and select there. We're also seeing that a lot of these cattle that are coming out of the feedlot going to slaughter are yearling fed cattle, which look how much better they grade than our calf feds at different times of the year. But we did finally see an increase this past week in forward sales of cutouts. So the prices have finally got down there where they're competitive enough with your other protein sources, and now we're starting to get some specials. You're getting to see some of these retailers go in and buy some down the road product and kind of set things up, and they'll be selling a lot of it, featuring a lot of it. They can start making some money on it again and keep this stuff moving, which we've been having good beef demand, and we still do. But you look at some things that we've seen here as we're getting into this sure down market compared to early May when our fat cattle kind of topped out here for this past spring and summer season. It was at 147 your cash fats on a live basis early in May. Now they're at $1.10, $37 drop here just through the summer. But you get into June, we saw our choice cutouts top out around $250. Now they're at in the mid 190s. That's about $55 drop there on your choice cutouts. Your real-time index on Beef Market Central there in June, early half of June, topped out at 152.5. Now we're about 141.5. We really only lost about $11. So things aren't that bad on the big yearling cattle. That goes to show you that we may have a lot further to drop on those. But your calves starting to take it now. We're just starting to get into our fall calves, and we're already seeing big discounts being applied on your unweaned and fleshy kind. Guys not doing anything with them, not cutting the bulls, not weaning them, not giving them much vaccinations or anything, just pulling them off the cow and bringing them in. Sometimes you can get away with that. It's already started that we're not getting away with that now. Usually you don't see those discounts really kick in till we get more into the fall, where you get the hot days and the cool nights and people start having a lot of health problems with them. But we're already seeing that now. And when you're in a down market going into a fall where you got the biggest fall calf run in 10 years, the only thing you can do is add as much value to those calves as you can. You need to get them weaned, and that doesn't mean the day before or a week before. You need to have those calves weaned for 45 days at least. And when you are weaning them, you can cheat by heavy supplementing them with feed. That's just going to put more flesh on them. That's going to throw them over towards the unweaned discounts too. But you need to wean those cattle for a long time. You need to have 2 rounds of shots in them. You need to have all the bulls cut. You need to have those cattle with a hard look to them and not put too much flesh on them. When you bring them into the sale, you got to keep them at an average flesh condition and give them a fair weigh up. And that doesn't mean giving them their breakfast the morning before you bring them into the sale that day. But you look at your real-time index on Beef Market Central, late on Friday, they're ending the week near 141.67. That was down 83 cents compared to Thursday's close, and down $1.78 for the week. And you think, well, that's not too bad. Really wasn't bad at all. We saw a big break in the cash feeders the middle of the previous week on Wednesday, you remember. And so we saw our early week sales here Monday and Tuesday this week catch up with those big $4 to $8, $5 to $10 losses. But we had already seen that in our mid to late week sales last week. And so we come in this week, by the time we got to our Wednesday, Thursday big sales, they were just about steady, and some of them a little stronger that had really gotten hit hard whenever the board was down the limit that Wednesday before, and everything really fell out of bed. So we didn't lose a whole lot of ground on the overall yearling market. And of course your yearlings will stay pretty good. Your southeastern calves, where you saw your best test of calves, they were $2 to $5 lower on order for those, but we may see a little jolt in those. Been getting a lot of rain in hard red winter wheat country, and there, as soon as it dries out, those guys are going to be starting to sow their wheat, and we should get a real quick up on your wheat there. It should pop up really quick and grow like crazy for a while. Could have a little problem with bloat on those cattle, turn them out, but that wheat's going to be rank early, and there'll be a lot of grazing. So there'll be a lot of guys looking for light calves to graze in the southern plains. But the word's out on this down market. The rumor has it some of the farmer feeders have heard that this thing's a little bit softer. We saw that on Friday there in Lexington, Nebraska. They had a lighter run, just about 1,500 head there. But compared to 2 weeks ago, their yearling feeders sold $6 to $8 lower. So finally starting to see them drop off up in there in the northern plains, where you see a lot of that farmer feeder demand, where they get the really good cattle. But still pretty respectable, for sure respectable, but it's a lot further off what they were doing. But you saw in Lexington, Nebraska, 65 head of 930-pound steers bring 144. But there is some pockets where the word hadn't got out on this down market. We saw one of those in Winter, South Dakota on Friday at 2 o'clock in the afternoon. They had a big load, 67 head, 933-pound steers there at 151 1/4. That's your week's markets from a home DV auction office here in Canyon, Texas. We'll talk to you next week.